So let's say a client in their peak earning years unexpectedly inherits $2 million from a relative. They also have significant existing assets and are concerned about their growing tax liability. What steps would you take to help this client effectively manage and protect their increased wealth?
So what we want to do, back to where the assets are coming from, is there's sort of I guess other questions I'd need to find, to kind of fine tune your question. So if they inherit $2 million of an IRA, well, let's remember that money's got to come out in the next 10 years. And if that's never been taxed, so what do we want to, so how can we create more deductions? How can we create a scenario where the money that you are earning and making, is there anything we can do to avoid taxation of that? Because we're not going to be able to turn off the income coming out of the IRA. And so then what are some of the things we could be doing, to be generating more deductions? That would be one. If it's not an IRA and we don't have that issue, then that's a whole different circumstance. Well, now do we want to put that into, do we want to use, a more growth oriented investment? Under the scenario that you're painting, this is wealth that they don't need today. And don't need it, for daily living. It's more of a longer term perspective. Can we get kind of that growth and deal with capital gains, in that kind of a scenario? Do we want to look at different vehicles that have different tax characteristics? We're giving off a trade-off there as far as how the different kinds of performance that we might expect from something like that. But again, if it's taxes, the other thing too is, we look at, a municipal bond portfolio, and you were saying, how does this life change? So let's say a person receives $2 million, or making good income, they've got good investments, and now they have this, this drop of wealth there. Can they generate good cash flow from something, in this environment, in a fixed income portfolio that might be a very compelling way to invest that they wouldn't have otherwise thought of if they hadn't just had that fall into their laps? So it really kind of just opens the window, or opens, the kind of the viewpoint of the opportunities that you have, but you're constantly looking at, can it be tax free? Can we create more deductions? Can we turn off income from another source that you were using because now we have this new one? We have to put all of that on the tax return and just kind of play it out and game it out, certainly for the next 10 years, if it's going to include an IRA. As you can see, things can get really complicated, and it takes a conversation to find out what's best for your personal situation. We're happy to start a conversation with you. Find us at gootfinancial.com and go to Contact Us, and we're happy to set up a 30-minute call just to learn about your situation and start to answer some of your big questions.